Since the millennium began, gold has outperformed stocks and bonds.
Yeah.
Yet, if you went into the typical financial service firm anywhere in the U.S., you wouldn't find gold in more than 1% of the people's holdings. Yet, the things that they own the most, gold has outperformed both of them. I think a lot of people will act when there's a fear of missing out. I think when it becomes clearer what will be transpiring with this gold and why it's been moved here, even if the price is higher, people will be more comfortable about buying it because it will become more of a general talking point. Most people are followers. Most people don't lead.
Gold has again demonstrated its strength as a safe haven asset, recently reaching new all-time highs. However, despite its solid upward trend, momentum in the marketplace appears to be slowing. While many analysts remain bullish on gold's long-term trajectory, some caution that investors must be patient when hitting the widely anticipated $3,000 per ounce milestone. According to commodity analysts at Metals Focus, gold prices are expected to reach $3,000 an ounce by the second quarter of this year. However, they warn that short-term profit-taking could create temporary price fluctuations. The primary drivers behind gold's recent strength have been heightened economic uncertainty and political instability, particularly concerns surrounding the U.S. administration's trade policies and widespread tariffs. Economic uncertainty was evident Thursday as global equity markets declined while gold surged to a record high. Investors reacted to a month since Donald Trump returned to the White House and the fifth anniversary of the pandemic's impact, fueled by concerns of a potential global trade war. The Dow Jones fell 1.01% to 44,176.65. The S&P 500 declined 0.43% to 6,117.52, and the Nasdaq Composite dropped 0.47% to 19,962.36. Veteran market analyst PeterGrandich emphasizes that market history suggests price ceilings are often temporary illusions. Just as the stock market once seemed incapable of reaching its current levels, gold's potential price growth remains unpredictable. Limited supply and rising demand continue to fuel its value, suggesting that its upward momentum may exceed expectations. Despite its strong long-term performance, outpacing both stocks and bonds since the turn of the millennium, its presence in mainstream financial portfolios remains relatively small. However, as awareness grows and the fear of missing out increases, more investors may turn to gold, even at higher prices. If history is any indication, gold's rally may have much further to go. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Well, we kind of knew that for those that paid attention when the BIS made gold a tier one investment. That really opened the door for these central banks. And if you think about it, since that time, they became major not only buyers of gold, but they've been divesting themselves of U.S. treasuries. They have sought other alternatives for their reserves. It also plays a role in the BRICS. And whether the BRICS stay a small offshoot group that works among themselves or grows much larger, as some of us like myself believe it eventually will, they will have to use something other than a fiat currency in order to show that they're trustworthy and be able to deal with. They've kicked around a couple ideas that will include about 40% in gold and using the other currencies of the countries. But nevertheless, what I think we need to come back to, and I know Bitcoin has stolen the financial media's attention and gold was pushed back to being a relic, but this is what gold has done for a couple thousand years. It's doing the things that a lot of people, including Kiko, have said for years. It's a store of value and a protection of wealth. And that's what it's doing. And now it's being done at a time when people are scurrying to get as much as they can of it, recognizing how useful it really is. We'll find out a few months from now, Jeremy. The BRICS will meet again in the fall. Right now, they're still having more members join. Yes, Trump had said a few things. He said a lot of things about tariffs and taking over countries and all, which I think he's really out of place to do that. But a lot of his art of dealing, that's what he does. He blusters. He sets up a worst case scenario. So that way, when you do settle lower, you feel like you got something. And he was glad to get that little part to begin with and all. But I do think gold is showing what we've all said, and it's paid to own it. You know, lost in all of this, Jeremy, in this millennium, which is now 25 years old, since the millennium began, gold has outperformed stocks and bonds. Yet if you went into the typical financial service firm anywhere in the U.S., you wouldn't find gold in more than 1% of the people's holdings. Yet the things that they own the most, gold has outperformed both of them. I think a lot of people will act when there's a fear of missing out. I think when it becomes clearer what will be transpiring with this gold and why it's been moved here, even if the price is higher, people will be more comfortable about buying it because it will become more of a general talking point. Most people are followers. Most people don't lead. And I think that's what it will need. But understand this, and this is a very good point. When I entered the business 40 years ago, and 40 years ago, the stock market was viewed as one of the last places you should invest. For 27 years, it was stuck between 700 and 1,000, Jeremy. And a guy named Robert Prechter Jr., who no one knew at the time, came out and predicted that the Dow was going to go to 3,700. And people were scratching their heads in the early 80s. 3,700. It's never been over 1,000. No one could imagine it could go to 3,700, yet to 40-something thousand 40 years later. The same is about the gold price right now. Most people can't imagine, it really can't go much past 3,000. It used to sell just 800. We have no idea what that could be about because there's not as much of it as much as what people could want of it. Look what the buy-in has done so far to it. So I wouldn't put any top number on it. Yeah, you could pick numbers for short term and 3,000's a round number. But remember, this is all new all-time highs. There's no real significance because we've never been here before. But don't think it just can't go higher because just things can't, because that's what people thought about the stock market for a few decades. And yet it went up, 30, 40 times the level that it traded for a lot of years.
The gold mining sector continues to show resilience, with major producers surpassing earnings expectations despite broader market skepticism. Following Barrick Gold's better-than-expected Q4 earnings last week, Newmont Corporation, the largest U.S.-listed gold producer and the only gold miner in the S&P 500, also delivered strong results. After the market closed on Thursday, Newmont reported a 9.2% year-over-year increase in Q4 gold production, reaching 1.9 million ounces. The company also benefited from higher gold prices, which surged 31.9% to an average of $2,643 per ounce. Free cash flow for the year totaled $2.9 billion, with a record $1.6 billion generated in Q4 alone. A key focus in 2024 has been gold production's all-in sustaining costs, as inflationary pressures have elevated operational expenses. However, Newmont reduced its AISC by 1.5% to $1,463 per ounce, a notable improvement from Q3 when costs had risen to $1,611 per ounce. That previous increase triggered a 15% drop in Newmont's stock and pressured the GDX Gold Miners ETF, contributing to the sector's Q4 underperformance relative to gold prices. Despite gold's bullish fundamentals, the broader U.S. financial industry remains indifferent. PeterGrandich highlights that gold ownership among the general public is minimal, and mainstream financial networks rarely give it coverage. Even in 2024, significant gold investment funds like GLD and GDX experienced net outflows, reflecting a lack of institutional and retail participation. This disconnect between gold's strong performance and its low adoption among mainstream investors suggests that the rally still has significant room to grow. As gold prices continue their upward trend and mining companies strengthen their financials, more investors may eventually notice, potentially driving further momentum in the sector. Let's get back to the interview.
I think it's part of this strategic use of gold that Trump plans, but I think it's bigger than that. Now, I must tell you, I've been part of a group for 20 years, and for a lot of those years, a certain person used to call us tinfoil hat folks, because not only did we speak about the manipulation that was going on, which subsequently was proven, but we talked about how much gold has been lent out and lent out multiple times, to the point where if ever that gold was originally called back, it could cause a domino effect. And I believe that's part of it. The good news in all of this, which gold bulls like myself should be well satisfied, is we no longer have the manipulators in the paper market that were basically in London and New York. They're done. They recognize they can no longer just short the paper market and keep it down in the press. Look, even when we have a $30 or $50 down day, years ago, Jeremy, it took weeks, sometimes months to make that up. Now we make it up in hours or a day or two. So the physical demand and the physical gold market now has finally overridden the paper market once and for all. And I think that also is bullish for long-term gold. And the thing that shocks me still is the general financial service industry, at least in the U.S. here, yawns at gold. There's real no interest or holdings yet. And that's why I think the market still has a much further way to go, because we haven't seen the general public involved in the gold market in any major way. No disrespect to what Kitco does and those who are smart enough to be getting people in hundreds of dollars lower. But the vast majority of people in the United States have little or no ownership of gold. We've seen statistics, the GLD, we've seen even the GDX, GXJ, we saw net selling of that through much of 2024. You can still go, and no offense, but if you do waste your time and turn on one of the financial networks here, you'll fall asleep before you see a mention of gold. So I don't believe there's real ownership, certainly on the retail or significant institution. I think this is a combination of gold coming back to be used in a big way through the government, and people who have been short have some real serious problems here who've used derivatives on the gold market on the short side. And I have to tell you something, I'd be less than honest, Jerry, if I didn't tell you that I somewhat enjoy it after all the years of pain that they caused. And now they're starting to feel a little bit what it feels like to themselves. There's that talk of that they might do it, or they may recognize that part of this is, listen, I got to take this, that Trump is a shrewd businessman, whether you like him or not, man. And he may be recognizing that in some way we have to be tough at the moment, but we'll have to not try to beat them, but join them. And maybe there will be a world movement back to a gold-backed currency or some way. But one thing it's demonstrated again and again and again, it's worked for a few thousand years. And that's why people are going to choose something like that versus something that's only been around a dozen or a couple dozen years, is too volatile and too, swings too much and doesn't have the representation that gold has. And that's what I think is transpiring now. The people with real big money, they recognize that gold is going to be their way out and not something else.
Gold's resilience in uncertain times continues to reinforce its value, yet mainstream financial circles remain slow to embrace its full potential. As mining companies post strong earnings and prices climb toward historic milestones, the disconnect between gold's performance and investor adoption raises intriguing questions. Will gold's rising momentum finally push it into the mainstream, or will it remain a niche asset despite its undeniable strength? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.